Hey everyone and welcome. We're only halfway through March and yet so much has happened in the markets over the last couple of weeks, and specifically the last few days. We had Jerome Powell testifying in front of Congress and delivering some shocking news. We had Silicon Valley Bank collapsing, one of the biggest American bank failures ever. Finally, we have some new data from the World Gold Council, which is very interesting. Basically, there is a lot to unpack, so let's dive in. Let's start off with Jerome Powell, who testified before the Senate Banking Committee on Tuesday, 7th of March, and the House Financial Services Committee on Wednesday, 8th of March. Both of these meetings ran for more than 2 hours each. I'm not gonna lie, there was a lot of boring stuff in there, but also a lot of useful information, so we'll try to summarize it for you. First of all, inflation. Jerome Powell stated that controlling inflation is tougher than expected. He and the rest of the Federal Reserve are acting on data and responding accordingly. But the problem here is that the measures they implement take a long time. In his own words, the full effects of our tightening are yet to be felt. More importantly, he bluntly stated that the Federal Reserve will most likely raise interest rates above the level which was previously expected. As I mentioned in one of my previous videos, the markets were pricing in peak interest rates of about 5.25%. As of this weekend, that's moved up to between 5.75% and 6%. Now, higher interest rates are typically associated with lower gold prices, and I've talked about why that's the case. However, the correlation isn't statistically strong. Plus, possible high interest rates right now only mean that there is a lot more volatility, uncertainty and fear in the markets. Gold is a natural safe haven asset, so this is actually a bullish factor for gold prices in my opinion. Even though Powell didn't mention this specifically, a lot of banks and investors are now certain that we will see a recession soon. At this point, there is pretty much a consensus that the US will enter a recession in the next 12 months. Most importantly, Powell was adamant that interest rates will stay high for as long as they need to, regardless of what happens in the economy. In all honesty, that is probably the best way to go, but there will be a lot of pain and uncertainty. Gold will most likely shine again as the safe haven, so the bullish pressure around gold keeps getting stronger. Next on the list, we have Silicon Valley Bank collapsing in a small span of just 48 hours towards the end of this week. If you're not familiar with Silicon Valley Bank, don't worry, most people are not. The bank mainly did commercial banking and serviced small companies and startups backed by venture capitalists and private equity funds. One example is Roku, which held roughly $500 million of their cash in there. I won't go into too much detail about the collapse because there is already so much news and content around it. Plus, we don't really know the full extent of what happened just yet. Hedge fund manager Bill Ackman quickly pointed out that this collapse could be the start of a national bank crisis, and that Silicon Valley Bank may be the modern Bear Stearns, the first lender that collapsed during the start of the Great Financial Crisis. I personally don't like Bill Ackman, and it is well known that he likes to stir up chaos for his own financial benefit. He does have a point though. Banks in the US are very much interconnected, and this could kick off a domino effect across the American financial system. Plus, a lot of banks keep a lot of capital in US Treasury bonds, which have now gone down in value because of the recent increases in federal interest rates, which may mean that they are a lot more fragile and undercapitalized than they look like. In fact, that was one of the main problems with Silicon Valley Bank and what made it susceptible to the bank run that took the bank down. At this point though, we don't really know what is going to happen, but it is very important that we continue to keep an eye on the situation. The main takeaway here is that trust in the American financial system is probably at the lowest point it has been in years. When investors distrust the financial system, what do? That's right, they buy safe haven assets like gold. Again, gold is probably one of the best safe haven assets right now, apart from US Treasury bonds. We saw this in the gold price, which jumped a total of 3% in Thursday and Friday. I know it doesn't sound a lot, but it is a lot when it comes to gold. The gold price then hit the 50-day moving average and pulled back just a little bit, but we could be seeing the start of a new bull run for gold here if the situation starts getting worse. Finally, the World Gold Council released some new data around gold demand. Quick summary, central banks around the world are buying a lot of gold. Just in January, global bank reserves increased by a net of 77 tons, marking this the 10th consecutive month of more than 20 tons of net additions to global bank reserves. This data is subject to change and is not final, but this is the biggest month of central bank gold buying in a long time. I mentioned this in my last video, but to me this just affirms that this trend of central bank purchases will continue. Obviously, there are a lot of factors here, but it seems like Middle Eastern countries, along with Asian countries, are trying to reduce their dependence on dollars as a currency by backing their own currencies with gold. Singapore was the biggest buyer in January with a net 44.6 tons, while Turkey followed in second place with 23.3 tons and China in third place with 15 tons. There could be some major incoming changes to the world economics, but one thing is for certain, and that is gold is going to become even more important in the next few years, especially physical gold. Now, what does that mean about gold price predictions? Like I said in my last video, I think the best case scenario for gold in 2023 is hitting $2,130, and following what's happened this month, this is becoming increasingly likely. We saw the resistance at around $1,800 hold strong. And given all the uncertainty right now, I think we have a very high likelihood of a bull run for gold. The only caveat here is that if investors panic or there is widespread selling, we may see a quick but short dip in gold prices before they rally again. I don't think we will go under $1,775 just because it is a very strong support level for a number of reasons, both technical and fundamental. However, if gold does fall below that price level, it will be a very solid buy opportunity. Like I said, chances are low, but it is possible. Overall, I think we are heading up, and the main thing we should be looking at is gold price breaking that 50-day moving average. When that happens, gold prices may start spiking up. That's my thoughts on gold for now. What do you think? Are we seeing the start of a new gold bull run? Let me know in the comments below. Also, leave a like and share the video with anyone who may be interested. Thank you so much for watching, and I will talk to you again soon.